Hey, real estate hackers, welcome back to another episode. Today I'm going to discuss why I am selling the majority of my small multifamily properties. If you have followed me, follow my channel, thank you. I'm Dave Hathaway. On this channel, we discuss real estate, we discuss investing, and we discuss building wealth. So by the end of the video today, you're going to understand my mindset and why I'm selling a bunch of my small multifamilies. You're going to know if building a rental portfolio of small multis is the right strategy. And you're going to know what I think is the best or easiest way to scale a rental portfolio. So that's what you're going to know by the end of the episode. So let's first just break down why I'm selling off a decent part of my 52 unit portfolio, or have sold off a decent part of my 52 unit portfolio in the past year and a half. So I basically scaled my portfolio back to the high 30s, high 30 units. There has been a reason. A philosophy of mine is always simplicity. It is more recently lower stress. It is kind of be able to diversify and build wealth in a certain way. And there is a few metrics in real estate that are hard to actually quantify. And one of them is pain or stress. And the goal of real estate in general, or the way you build the most amount of wealth, is if you stay in real estate for a long period of time. And if you have a higher stress level, higher pain level from properties, you're not going to be able to meet that goal. For instance, like if you purchase a property and you have the tenant from you know where, and they are the worst tenant in the world, they're ripping up your property, they're calling the city to say, hey, you're doing crazy stuff, you're not fixing things, and you have just the worst tenant there is. They're not paying rent and they're causing issues. That is a high level of pain, a high level of stress. And if you have one or two of those and that's all you have in your rental portfolio, you're not going to want to be in real estate for very long. You're going to want to get out as soon as you can. You're going to want to sell those properties because you're going to say, this is not worth it. And so you want to have lower stress, lower pain, so you can stay in real estate for a long period of time to gain a large amount of wealth. At least that's my philosophy. And so one of the metrics that I look at, in addition to just thinking about, hey, is this property causing me a ton of pain, stress, is return on equity. This is one that you can actually look at to say, hey, how much money is this property actually making me? And so here's a video that I did a while ago that really goes in depth on return on equity. Definitely should check it out if you don't know what return on equity is. But I'll give you an example real quick. If you put, let's say, $10,000 down on a property and that property is making you $1,000 a year, that is a 10% return. But if you put $10,000 down on that property and let's say you put a bunch of renovations into this property, and now if you sold the property, you would make $100,000. You don't look at just that $10,000 anymore. You have to look at how much money you have tied in the property. That's what you have to adjust for your return. So you look, if you may only make that $1,000 again, even though you only put a $10,000 down payment or renovation on the property, and now you have the property's valued at $100,000, you have to look at, well, how much is that $1,000 making out of my $100,000? And so that is 1%. So that return on equity is not good. And so you'd either want to refinance the property, if that works, or sell the property. Your two options: to take that money, take that $100,000 and then put it in a new property to recycle your money to continue building wealth. So when I was looking at return on equity, I just realized that, hey, these properties aren't making as much as I originally thought they were making me. And so and you can use this on anything, doesn't have to be multifamily properties. You should use this on all your properties to determine how much equity you have and how much the properties are actually making you, and whether you should redeploy your capital to something else. The other thing that I had a realization prior to selling some of my multifamily properties, the majority of them, is that, and when I say multifamily property, I'm talking about 2 units and 3 unit properties. I have a bunch of 2 unit, 3 units, duplexes, triplexes, realizing that these properties have a little bit more complexity. It's not like you just have a townhouse and you have one tenant that's responsible for everything. And if a tenant calls in a work order, The contractor just has to contact that one tenant. For these multis, they're a little bit more complicated. So let's say for the 3-unit buildings that I've been selling, if one tenant has an issue, let's say I have a leak and it leaks down to another unit, you kind of have 2 different work orders with 2 different tenants. The contractor has to schedule with each of those tenants. And so there's a little bit more complexity, but also there's complexity in how you manage that property. You usually have to do grass. You have to cut the grass. You have to shovel snow. A lot of times you'll have the complexity of having public service, which is the tenants have their electrical service or gas service, but then usually you have a hallway and you're responsible for that. And so you have a separate box, separate meter that runs that. And so you're getting these added costs that you don't necessarily get with other properties. And so if you're not actually penciling them out perfectly, which I probably was not penciling them all out perfectly or adding all the different expenses. So when I looked at my returns, I was like, man, these are going to be amazing. They're going to be like 19, 20% returns. They're still decent returns, but when I measure back in that stress and that pain, the returns just don't look as good. They need to be amazing to have that much stress and pain. The other rule of complexity that I realized is the more complex your business is, the harder it is to scale. So if you have a short-term rental and then you have a single-family property and then you have a multifamily and then you have a self-storage unit with maybe a bunch of garages that you rent out, it starts to be complex. You need different leasing agents for different properties. You need different managing styles. You need different softwares. And so I realized that I want to be niched down so much that the business is super simplistic. And I can't stress this enough. It doesn't mean don't be opportunistic. You see an awesome deal, which is what happened in a lot of these scenarios. So these properties, they were awesome deals. They've built my wealth. They've made me money. But at this point, it's time to recapture it and say, hey, we're not willing to take that complexity. We want to simplify the business down so we can continue growing it in a specific way without different oddities and complexities. And so when I talk to other investors as well, and when I look at some of my friends that have large portfolios, I see that they are super niche down. One in particular has 400 units. It's all single family properties. And it's 95 or 98% Section 8. It's super niched. Single family properties, Section 8 or voucher tenants, tons of units. And you can't do that if you have so many different asset classes. So please take away from this that try to focus on one asset class if you want to scale your rental portfolio and you want to scale it quickly and large. If you do all these different ones, you're going to go crazy. In that same vein, and so I'm not just telling you what to do and not doing it myself, I also purchased a bunch of commercial buildings while building my portfolio out. Commercial buildings and mixed-use buildings. And some of them were 3-unit buildings, 2 commercial units on the bottom, 1 rental on the top. I've sold those properties and redeployed that into alternative assets, for one, to diversify myself just away from my own portfolio, but to single-family properties. Like, hey, this is the business model. This is how I want this company to run. Maybe in the future there can be a completely different asset class, but I want to stick to one asset class. You build the rental properties. So again, choose one asset class, try to niche it down as much as possible. Market tenants, Section 8 tenants, just one asset class, a one tenant base, just go down as far as you can go to try to simplify everything as much as possible. Now, in addition to that, I did realize that I did not totally renovate these entire properties, which caused its own level of complexity and pain. And so when I purchased a couple of these multifamilies, some of them had tenants in a few of the units. And so we do an entire cookie cutter renovation like we always do on other properties on the units that weren't occupied. But we left some of the units just renovated however sloppily somebody wanted to renovate them. And then sometimes we come in and do repairs, but there was never like going back to our kind of standard. And that was a mistake. And so I have a video here that talks about bulletproofing your properties with renovations. And when you bulletproof your property with renovations, it just makes so many less questions from contractors of how you want to renovate the property, because you renovate it the same way every time. You're using the same tile, same LVP, the same paint color, same door color. You're using all the same styles. And so when they do a renovation or when they do a repair, they're just putting back the same thing. They know exactly how it goes. when you have all these other Picasso renovations, we'll call them, it becomes complicated. They don't know, hey, are we going back to this style? Do you just want me to replace this one tile? And this tile doesn't look that great. You just want to keep... And so it just makes another complexity. So it goes back to that super simplistic business mindset. I also want to share with you a few mindsets that I have that have really helped make my rentals more profitable, but also just made the business run better. So some of those mindsets are the philosophy of simplicity, which I've harped on a ton. The philosophy of responsibility freedom. So being able to not be so involved in your business. You can do this in a bunch of different ways, whether it's investing in different things outside of your portfolio, whether it's hiring a VA, but responsibility freedom. And then the last two is lower your stress levels however you can. A lot of times that is via simplicity. But the last one is live with people or live and work with people you love. And so if you're working or you're partnering with somebody, make sure it's somebody that you really enjoy. And if you don't, break that relationship off. If it's a contractor or if it's a tenant that you're like, wow, this tenant is terrible, you need to get rid of that tenant. But work and live with people you love. I think those are really good philosophies. They've really helped me. Now, in that main vein of selling my multis, selling my commercials, there was also another epiphany that I had. That epiphany was that if I've done a full renovation on a property, there is, and this is like, hey, if you've done everything, walls, pipes, if you've done the majority of stuff in the properties, you know that it's good. There is a golden time to sell your property. That golden time to maximize ROI is 10 years. And that's because all this stuff, your roof, your flooring, your toilets, your water heater, your HVAC system, all those are different components of the property. They all have a lifespan. And that lifespan, a lot of them come 7 to 12 years. They start failing. And the more that fail, mean your expenses go way up. So if you can sell a property prior to a bunch of these things failing, you maximize your ROI. It doesn't mean you're being sleazy, you're pushing off, you're hiding stuff that's broken. You just know that eventually this stuff is going to fail. I don't want to be the one that has to replace it. I'm just going to pass it along to the next investor. So 10 years, best time to sell a property if you've purchased it. Let's do a quick review on everything we talked about in the video to sum it up. So make sure you KISS, keep it simple, stupid, really niche down if you want to scale a portfolio well and scale it with simplicity and low stress. The next is sell properties that have low ROE. If you haven't watched that video, don't know what I'm talking about, definitely check it out. I'll put a link in the description. Next is tenant proof your properties as much as possible. So when you're doing that renovation, choose things that are gonna be long lasting. Check out the video if you haven't seen that. It's a really good video. It talks about the things that I do to tenant proof the properties. And the last thing is just redeploy capital to where it makes the most sense. And so hopefully that helps. Thanks for joining us on another video. If you haven't checked out our website, www.realestatehackers.com. This is a new website with the new branding. It has a list of preferred vendors. So if you haven't checked it out, check it out, download it. These are trusted preferred vendors of different specialties, different categories that can help you out, help you continue to grow in your investing journey. And I'll see you on another show.